Good morning, everybody. It's Monday, January 29th. This is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or want to chime in on anything we're talking about today, please feel free to drop us a line in the chat area, and we'll be sure to get to that during the show. Real quickly here, overnight markets had March corn down 3 1/4 at 443. March soybeans were down 7 1/4 at 1202. And March Chicago wheat was down 8 at 592 1/4. No export sales announcements here this morning. Basically, really what we've been focused on as we headed into this last weekend was a drier forecast for Argentina. It appears this morning that, the next 4 to 5 days, they're still looking to be, pretty elevated temperatures up in the hundreds by some accounts. So that will, certainly be a drying pattern. However, this morning, the models looked like the kind of 10 to 14 day shifts back to more of the wetter pattern that they've had. So kick it over to the guys. What's this mean? Are we going to see a little soybean volatility here as we argue about weather maps for the next couple weeks in Argentina?
Yeah, Dan, I'll jump in. Looking at the updated models, kind of to your point, right? And kind of a 2-week forecast. It looks like they're bringing some rain back in. The European looks pretty wet. GFS not nearly as much, and then the Canadian model is kind of a mix of the two. So it's a long way out. Looking at the next 9 days, I believe, over 100-degree temperatures, well below normal rainfall during that time frame. So, all of our customer knows what that means, right? Like it's going to be pulling moisture out really quick out of the ground. Sure. It's going to look, it's not going to look great, and, so it is that question, right? Will the rain return? Or are we going to play this? There's always rain in the forecast, and then it no pun intended, evaporates, right? As we get closer to that time frame. So I'm guessing the weather models go back and forth a couple times, and we trade that a few times, and then it's gonna kind of wait and see if those models keep pushing the rain out or if it actually comes to fruition.
Hey, Chase. Oh, sorry, Dan. Hey, Chase, I was just getting questions from growers. Like, how would you correlate their time frame on our growing season? Like, what are they experiencing? Like, is this like close to pollination? Are we in pollination?
No, I think we're still some time away from that. I don't know exactly. Dustin brought up kind of that what the USDA has their growing season in Argentina. I believe it to be, still a month out for that critical time frame of pod filling. I could be wrong on that. I don't know if you agree with that, Dustin, but I kind of.
If you could pull up that map for me, Jack, on the that's your crop calendar right there. So, we're going to be approaching harvest in late March and April for Argentina. So, and this is for, both corn and soybeans. So we're kind of right in the heart of that. I do think, just looking at just percentage precipitation anomaly projected on the Euro, it's not necessarily a slam dunk that weather's gotten better all the way, and that this heat is not going to result in some sort of questionable outcome. They had a really, really good start to the growing season, no question. But this is a time of year that, it could go either way. So time will tell. Market's obviously not responding that way. The market's hitting new fresh lows overnight, and there still could be some geopolitical turmoil that's causing some of that. But I do think that the calendar is ripe for discussion.
Yeah, absolutely. And it's funny you say that. We were talking this morning, there's just, news story after news story, and it's all hypothetical at this point, but, Trump talking about, pretty significant, federal tariffs on Chinese imports, anywhere from 40 to 60% are numbers that they're floating out there. You have to feel like some of this stuff is starting to take notice. You got an ultra short fund position. Last week they're continuing to build a larger short position in the soybeans. Corn now is 275,000, short. So, you have to think that somebody around here's got an opinion on what this thing could look like.
Right. Right. And Dan, I don't know if you saw the EU too with the French farmers blocking the highways and stuff with the new tariffs with the election. So I don't know if that has a lot to do with it, but there was some drama over the weekend with that. So.
No, absolutely. This stuff is we've been talking about this. It's been a theme that we've been building upon, right? I mean, these are geopolitical things that can flip on a dime. There was obviously you've got the 3 service members that lost their lives in that drone attack in Jordan. Right. So what's the response going to be there? Ben had I thought a great piece on Friday, just about the response to a lot of this stuff that's going on, is certainly going to be, indicative of how we're reacting over here, from stock market to certainly our commodity markets that we're focused on every day. One other thing too, guys, Dustin, I know we talked a little bit. There's, going to be some discussion later part of this week as we start to set crop insurance for the spring. We'll be averaging through the month of February, but also the volatility. Volatility is a factor which is factored in when you're getting your premiums for your crop insurance, and so we'll be watching that very closely. We'll also be updating you on those prices during the war room. But what have you seen so far, Dustin, just in terms of relatively where we're at in volatility?
Well, generally, when the market falls, your volatility falls as well. That market prices falling are usually indicative of the expectation that supply is easily going to meet demand. So you generally start to see price movement, start to fall. Volatility is generally a measure of your expected price movement. So we have implied vol, which is how the options market will imply vol will be, right, where the option traders will buy and sell at those prices. And then you have historical vol. Historical vol is pretty low right now. December corn is moving pretty sideways. So I would say the lower the vol, the better for the premiums, because you still have the expectation of we don't know what weather is going to be in the summer. A lot of the reason we buy crop insurance is for the yield uncertainty, not just the price coverage. So having cheap crop insurance is a nice thing for this time of year. But having a lower guarantee, I think that's one of the bigger concerns for everybody. So we had a lot of corn acres last year. We could guarantee a really high number of guaranteed dollars because we set it at $5.91, and we had a fairly significant vol discount from the prior year. So this was a great year last year to buy crop insurance for corn, and certainly made it easier to go buy up that coverage as well when the market started going down into March 15th. In the 470s, though, it's certainly going to be very, very difficult to ensure, towards profitability, let alone to prevent, larger losses at these 15 and 20% deductible policies. It's going to be difficult to do that this year. So the insurance discussion will be very important as we go into March 15th of, what the conditions are, what you can buy. Still a long ways out. We're not into that price setting timeframe yet. So we had all the Feb to go through for that.
Yeah, and it's a great point you bring up. You guys, I know it's already begun for AgYield clients specific, but other folks I'm sure are starting to think about it. But running through those scenarios, right? What worked last year or made sense last year could look completely different this year, and vice versa. And so I think it is, you want to talk about the time is right for running through those scenarios, making sure you're properly positioned and trying to take some of that, if anything, some of that stress off of your plate, because there's going to be a lot of decisions in the next, 30 to 60 days.
Yeah. And we'll have another topic on farm bill decision as well. So we know we're getting a lot of conversations about Ark County versus, PLC. Yep. And the rising prices here and those products. There will be some people that will have a decision between the two. I know a lot of people are electing for Ark County right now for corn, but there's still some situations where PLC might not need to be totally disregarded. So
that's a really good point. And I know that we talked earlier this morning, and I guess this will be like a news break, but we're going to put together another exclusive content piece for AgYield clients. We're going to discuss PLC in Ark County, and what some of those decisions look like. So we'll get registration stuff out to everybody, but we're gonna, I think, put that together probably this week. But more details to follow, because everybody has been wanting to take a look at that. Rylan, how's Livestock for going to start the week here?
It's looking pretty good going into this week. I mean, you had a massive close pretty much across the board in the live cattle feeders as well. Everything's kind of, as we talked about last week, it's all systems go. Cash was up 2 to 3 last week. We saw live at up to 175-ish. Overall, I mean, you're hitting some pretty big numbers. You got February, April cattle knocking on the door of the 100-day moving average, and pretty close to 50% retracement of that fall that we saw from last year. So it's been a really good move. There really just doesn't seem to be a lot of fear going into this report on Wednesday, which is really where a lot of the focus is going to derive. And we already know that the funds have quietly started to add some new length to the market here. Committed traders showed that they bought about 4,000 contracts on the live side, about 3,000 in the feeders. They're also getting along in the hogs, bought about 4,000 hogs. So seeing that the investment community is, I mean, obviously cautiously optimistic here is a good sign. Definitely adds a nice level of support, but we're kind of in that seasonal time frame too. There just isn't going to be a lot of resistance here without some kind of black swan. I mean, prices typically kind of go up from here into the summertime as demand starts to ramp up. So we're kind of in that phase where we could definitely see some risk off if we start to see bigger numbers start to show up just from the herd size on Wednesday's report. But you know, it will just kind of take that data in stride. We're still sitting at historical price levels. So, you know, protection is really important, I think, right now, just having that below the market, just making sure that you've got enough coverage to kind of weather a storm, because anything unanticipated right now, you know, could really cost a lot of money down the road. So I think that's something just to be aware of. But I mean, hey, it's all good news around here so far. So we'll see if that changes on Wednesday.
That's why we keep you around. We need a little happiness. You know,
Try to be optimistic.
Right. Real quick, I've been seeing some LRP quotes come through and stuff. Are those starting to look a little bit better now after the break we had? I mean, getting more LRPs in place.
Yeah, I think it's important. I mean, at this rate, you know, that's some of the cheapest protection that you can get as opposed to taking it to the board right now, just from a funding and margin standpoint. It really makes a lot of sense just to have some kind of revenue floor here. And, you know, as we've talked about, you can get up to you can get like 95% coverage, nearly 100% coverage in some cases, and you can go a year out at this point. So it's just a matter of finding that right end date that kind of works for your marketing, also finding a price floor that you're happy with, and also a premium that is affordable. So, I mean, you weigh those three options out, and it's kind of a no-brainer at this point, because we are still sitting at historically high levels, and obviously everyone wants to leave their upside open, but at least, you know, you got the downside kind of covered here. So
yeah, sure. And then one last thing, right, on that report Wednesday, that's a 2:00 release.
Yeah, market will be closed for that one. It's coming out at 2.
Right.
It's
okay.
a cattle inventory report. So
yeah, will we see estimates probably next day or so? Or
yeah, we'll see about 2 to 3 separate analysts put out theirs. Erner Berry is one of them that's going to have theirs out this week. But it's, you know, everybody will kind of throw their hat in the ring a little bit, but generally we're expecting right now beef herd to be down about 2%, calf crop still to be down about 2%. It will be a real shock to the market if we did see any kind of signs of expansion. So that's really what we're going to be kind of focusing on is breeding herd retention. Still should be down, but the $1 million question is, did prices get high enough for long enough for these guys to retain their breeding stock? So that's the question.
Yeah, and then the one last piece I had somebody asked me the other day, just how we felt. I mean, how did weights come through after that system? You know, I know it was a couple weeks of pretty bad weather, but have you seen anything on the weight side?
They were down 10 pounds. from that week.
Yeah.
So like that was a big problem. And like right after that number was posted, the market exploded. So like obviously we're going to be really sensitive to the sudden changes in production. You know, we had production hamstrung because of the weather. It's since starting to dissipate. But that was a real problem. And at least from a feeding standpoint, you know, there was that time frame where you just weren't getting a lot of bang for your buck out of the feed. So that's really what the focus is going to be, you know, just in the interim, is if we're going to keep weights down or if, you know, they're going to recover. I would imagine we're going to recover a little bit. Some of those areas, Kansas, Texas, definitely started to show signs of improvement from what our guys were telling us, but we'll see if that's widespread.
Very good. Thanks, Rye. Just came into the open here, fellas. March corn down 4 3/4 at 441.5. Soybean market sharply lower here, down 13.5 in March. 1196 is the last. New crop down 11.5 at 1173.5 for November. March soybeans down 8, or excuse me, March wheat down 8 at 592.5. Today at 2 o'clock Central, we will be having our first exclusive content show for AgYield clients. We will be speaking with John Wenzel from StoneX. He's going to be discussing today some fuel and energy market updates, discuss some trends as we go into the spring. So we're really excited about that. There's still time to register. So if you need help registering, please give us a call. Otherwise, we have sent that link out to AgYield consulting clients. So we'd love to see everybody here. 2 o'clock Central, we'll get going. It'll be open for questions and everybody will get to pick John's brain. So should be a good show. As always, we're streaming live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate everybody tuning in here this morning. Hope everybody has a good start to the week, and we'll talk to you there tomorrow. Have a great day.
Thanks, Dan.
Thanks, Dan.
Hi, guys.